Good morning and welcome to the Haven Financial Group radio show. I'm Larry Kallevig, founder and CEO of the Haven Financial Group. We certainly appreciate you listening this morning. If you have anything that resonates with you, feel free to give us a call at 612-504-8400 or visit us online at havenfinancialgroup.com. Great to have Glenn Ramey on with us this week, Kim. We're going to talk about insurance and how that fits into retirement. Even though maybe don't like to talk about insurance, how it should be part of the overall retirement conversation. So great to be with you again, Kim.
It's great to be with you, and it's great to have Glenn here with us. I know he enjoys talking about this, and it's such an important topic when it comes to retirement. I think a lot of people I know that I have done this much of my working life, taken my insurance for granted because it came through my employer, and maybe, they took a chunk of money out of my paycheck, and I never saw that, so I never really thought about it. And then all of a sudden you get to retirement age, and you start realizing that you have to take care of your own insurance in many ways. And wow. You think, gosh, I should have appreciated my employer more because that's a big chunk of money. So it's something that you want to plan for. It's something you want to think about, but it's not something you want to skip. That's for sure. So I'm glad that this topic has come up and that we're going to chat about it today. Healthcare and a long-term care insurance policy that you might need in retirement. We'll chat about that. How life insurance can support retirement. We're going to talk a little bit about understanding annuities because, annuities are all coming from insurance companies. And finally, mistakes to avoid with insurance when you are in retirement. So let's get started. Glenn, we've had this opportunity to chat about insurance here on the Haven Financial Group radio show a few times before. And one of the things we talk about a lot is long-term care insurance and how important it is. I'd like for you to explain to our listeners, because I'm sure there's a lot of them who are joining us who have never been here before, why it is so important for people to consider this.
Yeah, let's start with one, I think, shocking statistic related to healthcare, which is a 65-year-old entering retirement should project roughly about $165,000 in healthcare cost, excluding, I'll repeat, excluding long-term care cost, not including them, which means long-term care is now a separate cost from what we normally think of our healthcare bucket cost, right? And now some more staggering statistics for you here. 70% of us are expected to need some form of care before passing away. 50% of us are expected to spend time in a nursing facility before passing away. And the average stay in a nursing facility at this time is around 3 years. A little higher for women, a little lower for men, but the average is right around 3 years. And currently in the state of Minnesota, the median cost of long-term care in a nursing facility for a full year has just reached about $140,000 for a semi-private room in a long-term care facility. Yeah. So we're talking already close to $400,000 of potential average long-term care costs that aren't in your healthcare cost bucket. They're not part of your Medicare. They're part of a completely separate cost that isn't addressed with inside your normal healthcare insurance.
Mm-hmm. Okay, so having said that, there are ways to prepare for this. And absolutely. So we don't want to scare anybody off. We don't want anybody to don't flip the radio off right this minute thinking, well, this is way over my head, because that's not the case. No. We're going to walk you through exactly the kinds of steps that you need to take, or at least you need to start thinking about if retirement is in your near future. So let's talk a little bit about Medicare. Yeah. I think a lot of people believe that Medicare is free medical insurance from the government. So let's walk through it.
Yeah. So first off, Medicare itself, right, is a component of healthcare, not a complete package of healthcare benefits, a component of healthcare provided to us by the federal government. And it comes in these parts. We have what's called Part A of Medicare. And Part A of Medicare, in the simplest terms I can provide, is your inpatient benefits, covering hospitalization, skilled nursing facilities when in there for rehab. It's going to cover home health care on a limited basis and hospice care on a limited basis. And this part of Medicare is one we pre-paid for with our taxes. So that Medicare tax on your paycheck stub, that is what's going to pre-fund Part A of Medicare for you. So as long as we have a working history of 10 years or longer, or a spouse that does 40 quarters, we don't pay any cost for that Part A component of Medicare. Part B of Medicare, the second component the government is providing to us, is our outpatient benefits, again, in the simplest terms I can provide them to it. This is our doctor appointments, our testing, our outpatient hospital and surgical procedures, our ambulances, our durable medical equipment, all falls under that Part B like boy benefit under Medicare. And those are the only two components, by the way, the government is providing to us. And that Part B benefit has a monthly premium to it. Today, that monthly premium nationally is $202.90 per month. But I have to remind consumers that that is a means tested number. That is the least someone might pay for Medicare without other financial assistance coming in due to low income. You can pay more if you're a higher income earner. So if I use the numbers today, if I'm a single individual and on a 2-year look back, because they pull out an old tax return for 2 years to see what your income was 2 years ago, is over $109,000 for a single individual, or over $218,000 for a combined income of a married couple filing jointly, then you could be facing higher cost for that base component of Medicare from the federal government for that year that higher income happened in those prior years. So think of that 202 as the base. No matter what else I'm doing in Medicare, we're now going to add on top of that. Now we start going into what is offered by private insurance companies, right? The core comes from the government, but I should mention there's two, I'd say, reasons we look to other insurance above and beyond what the government I just said is providing to us. That Part A benefit is a limited benefit health plan. It is not unlimited hospitalization coverage benefits. Under Part A of Medicare, we have a maximum of 150 consecutive days covered per occurrence in a hospital setting. Not an unlimited time in a hospital. Even if our doctors are saying we need to be there still, Medicare itself would stop paying the bill on the 151st day. And I don't think anyone wants an insurance plan that's going to stop paying their medical bills if they're still in a facility, right? Mm-hmm. The second problem with Medicare Part A and Part B by itself with no other insurance is that there's no out-of-pocket limit on original Medicare. They don't put a cap on how much you could pay in one calendar year like you, as described in the beginning, your current employer plan does, right? Your employer plan is what they call an out-of-pocket maximum. And if you reach that, you don't pay any more medical bills for the rest of the year. If all I had were those two components the government provides for healthcare, I would have an open-ended responsibility on what I could owe in medical bills in a calendar year, not a capped responsibility. So we look to these other insurances to fix these problems. And I'd say there's two main paths we go down: Medicare Advantage or traditional Medicare with what they call a Medicare supplement or Medigap policy, and a standalone Part D plan. So if I may address that Medicare Advantage one first. Think of a Medicare Advantage plan as a package of benefits. I'm going to have my A benefit, my B benefit, my Part D, like David, drug plan benefit, all wrapped into one package of insurance benefits offered by an insurance company. Now, I still have to keep my Medicare. That doesn't mean I get to cancel my Part B benefit that I have to pay for. You're still paying for your Part B benefit of Medicare. That Medicare Advantage is an addition to that. In that situation, your Medicare goes in the background. It's there, but you're using the plan you bought from that insurance company, your Medicare Advantage, which also might include extra benefits like dental, vision, those type of benefits included. Mm-hmm. Now, the alternative path is the traditional path, where I'm going to use Medicare Part A and Part B as my primary insurance. Medicare government program pays the bills first. As the name implies, my Medicare supplement or Medigap policy fills in the gaps of what I'm supposed to owe. Both plans remove the cap of 150 days of hospitalization coverage to more than a year of hospitalization coverage, and both of them place a limit on how much I'm going to owe in medical bills in one calendar year. Now, there's obviously other nuances that I would discuss in a meeting with the client about what those differences between Advantage and supplement might be, but we're going down one of those two paths when it comes to Medicare.
Sure. Absolutely. Okay. So we've talked about Medicare, and yes, if you're listening and maybe you're just being exposed to all of this for the first time, or maybe you've heard it 100 times, it can be very confusing. And it's the reason that you want to sit down with Glenn or with someone like Glenn to walk through these step by step to understand exactly what they provide you and what's most important to you when it comes to your retirement. We want to jump ahead a little bit about long-term care here, Glenn, and we may have to revisit that coming up in our next segment. But long-term care, there is insurance out there for this. But, you know, for the longest time, people were run off and scared of this because of the expense.
Yeah, and I don't blame them, right? A lot of times, individual trying to show us long-term care options, sometimes they come in really aggressive, trying to fully fund that long-term care cost and insurance policy for you. And I wouldn't be surprised at someone balking at what the cost might be considering those statistics I shared earlier, right? Care is expensive. It's highly likely we're going to receive it. So there's a high likelihood if we buy insurance for long-term care, we're going to actually end up using that insurance policy.
Right.
Also, those traditional models of long-term care often have disadvantages, like premiums that can raise on me over time, even though I didn't do anything, right? The insurance company needing to raise their rates on me. The fact that if I pay all this money into a long-term care policy and then don't use it means that insurance company got to keep all those dollars, right? None of that came back to my family. Well, I'd say for these people that are concerned about those things, they've been addressed. There are alternative paths to long-term care planning for people that are better savers, that people that want to look at ways that I can get money back if I don't need my insurance, ways that I can have more leverage on my dollar without sacrificing my dollar up. So today we see a lot more what we call hybrid long-term care plans. Life insurance and long-term care insurance combined into one insurance policy to help protect us. That way, if we don't need the insurance, the death benefit pays out to our family. If we do need the insurance, we have more than just our life insurance to help fund those long-term care needs. And then we also have what we call asset-based long-term care plans now. These are ones that don't require an annual or monthly premium to pay. They're going to be a repositioning of savings that we don't give away. We keep it, we own it, and we let our interest cover the cost of care without sacrificing all the potential gains our money could have, but then leveraging that dollar against that long-term care event. So if we need it, that savings that we set aside, it may be 2 to 3 times or more the amount I set aside for long-term care planning.
All right, Glenn, I'm going to stop you right there. We're going to take a quick break. Glenn Ramey is with us. He's the insurance expert at Haven Financial Group. We're going to take a break. We're talking about insurance and how it impacts your retirement. We're, of course, talking about health insurance. We're talking about long-term insurance. We're going to talk about life insurance as well. If we're hitting a chord with you and you need more information, 612-504-8400 is how you get a hold of the folks at Haven Financial Group. You can sit down with Glenn and talk through some of the things that you're going to hear about here today on the show. Again, it's 612-504-8400. When we come back, more about long-term care as well as life insurance in retirement. This is the Haven Financial Group Radio Show.